Strong performance with a stable growth over multiple quarters brightens prospects of Bluestar Limited. A wide range of products with manufacturing facilities across the country, market standing and leadership based on a strong distribution network and long-term trust. Bluestar has a business model of 3 operating segments, but core business segments are 2: air conditioning and refrigeration. Project sales are a great facilitator. Strong peers like Voltas, LG, Hitachi, Godrej, etc. The segment leads as a major contributor to revenue and profits. Unitary products, the second segment, comprises room air conditioners, refrigerators and cold chain equipments, among others. As a significant contributor, its share is quite substantial. The segment covers activities of distributorship and refurbishment. It relates to equipments from global suppliers and medical systems, a small but evolving vertical. Sizable annual revenue reaching almost 12,000 crores, a strong year-on-year growth trajectory, impressive annual growth in FY25, posts excellent profits, beats revenue in 5-year growth rate. Rising PAT percentage across 5 years is very significant. The exceptionally good results during FY24 and 25 are indicative of bright future growth potential benefiting stakeholders. Bluestar stands out in terms of margin movement across 5 years, moving upwards every year, year after year. All 5 years is quite phenomenal, more particularly in the background of rising competition and continuous input inflation. Quite a significant investment in capex, particularly during the last 4 years. Regular in dividend with an average payout of about 40%, but with a negligible yield of around 0.5%. In terms of operating cash flow, FY25 is at its peak, reporting closer to 700 crores, which is helping the company have funding of capital expenditure, payment of dividend, besides boosting the liquidity position of Bluestar. In terms of financial strength, the company has short-term and long-term liabilities totally covered by current assets, with a significant surplus of about 20% in FY24 and a matching amount leading to about 18% in FY25. Growing surplus from operations is helping the company benefit from lower leverage going forward. Rising contribution of equity funds in the total balance sheet of the company, whose size has reached beyond 8,000 crores, almost 40% funded by the company internally, and the proportion likely to move up, reflecting a strong and effective equity-driven financial profile. A very carefully nurtured equity, largely by plowback and through QIB of rupees 1,000 crores in FY24, supporting the enhanced equity through a return of over 20%. 2 years in a row, return on equity sums up the successful deployment of funds with a rewarding rate of return. Shareholding pattern 31st March 2025 as compared to 31st March 2024. Shareholding of promoters stable and significant. Domestic institutions, mutual funds and FPIs, all three put together, exceed promoter holding, a reflection of investor trust and confidence in the company and its business prospects. It is quite evident that profit growth is there in all 4 quarters of FY25, but the market has supported only the first 2 quarters as the prices have fallen steeply post quarterly results in the second half. Interestingly, even after hitting 52-week low, the PE multiple is at a level greater than peer average of 51.7. Performance and growth prospects apart, market still considers Bluestar expensive. Falling from a 52-week high in January 25, the share price collapsed at end of May. 50 DMA crossed 200 DMA on 19th May and the share price moved into bearish zone, reached 52-week low, currently 8% above that with a FIBO of 13.9%. The result of the death cross might force it to have a prolonged period of decline before a directional change. The trading volume and order size on the one hand and the price on the other have been moving at a direction opposite to each other. The divergence is more pronounced from mid-April 25, where the price is making lower lows while the volume and order size are constantly moving up. Under mounting pressure of rising volume, price movement can only be bearish in the near term. Rising AC penetration and growing presence in rural segments are quite promising for business growth. Order pipeline with consistent growth year after year is a reflection of higher revenue visibility. Environment concerns on the use of certain refrigerants and the stringent regulatory changes therefrom are a business challenge. Hope this presentation on Bluestar was to your liking. I am Vitthal Prabhu with the fortnightly video on Stock Learning Simplified. You can access videos of similar kind at the info card. We look forward to your valuable feedback. If you are new to the channel, may kindly subscribe and press the bell icon for intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.